Hi guys, I would like to show you some statistical strategy what you could use for improve your trading. So you need to click on the button statistical strategy and you see some kind of this strategy. For example, I would like to use mean reversing strategy or momentum strategy. Let's see, for example, momentum strategy. This strategy show us some sequences between grow and down in the candle bar. For example, we have some statistical dependency when we have some 5 grow bar or 3 green red bar, and we could use it. So what you need to do, you need to click on this icon, and you need to find some sequences. For example, let's see some sequences. Let's start from one sequences. It means we see some green bar or red bar. And if we see this one, we find some profitable ideas. And I check the strategy long time, and I could say that some statistical dependency save in the market sometimes, but when we have some high turbulence on the market and this statistical could broke, but when this saves the statistical, we could trade it. For example, several days I trade momentum strategy with one sequence bar, and because of this dependency saving several days. And for example, let's check some statistical about the strategy and what I'm looking some positive average return, and I'm looking some that positive return could more than a negative return, for example, and I see some positive mathematical exponential, and I could use it. Let's check, for example, the another period. In general, I like to use a 5 minutes period, but for example, for one sequence of statistical, this dependency was broke when we see some drawdown. And what I'm looking, I try to look in some different dependency what is saving in this current moment. Let's see what we need to do. For example, let's check another sequences. Let's check 2. No, it's not working. Let's improve more bars. Okay, it's not working now. Let's check 2. Okay, it's working maybe. Let's see. Okay, but we have less some positive returns. Okay, so let's see another. For example, 4. What about 4 sequences? Okay, we have some dependency. Let's do, but we need reverse. We do some reverse. Let's check. Okay, yes, we have some statistical advantages because we have a positive return about 38 and total negative return about 20. Okay, we could use it in our goal. And I'm looking, for example, some signal when I see some signal for sell, and I'm trying to sell it also, and I'm looking some entry point on the market because I know this stage of the market is safe at the moment and we could use it. For example, another strategy what I'm using, this mean reversing. Mean reversing, it means we have some change percent of the market, and this is a very popular strategy between quantitative traders when we have some support line and resistance line, and we have some dependency when is market is divided more than, for example, 1 sigma, and it would be a great opportunity to buy. For example, let's look in the statistical. For example, we could do some improvement. Let's see. For example, I tried to improve using window board. Let's see what is it. Okay, it seems working. Let's look in on the statistical. Okay, we have, maybe it's not good statistical, but positive average return is good. Let's see another. Negative average return is less. Okay, and I'm trying to look in dependency on the market, what is the signal, and I'm trying to find what dependency we have on the current moment, and we could use it. For example, let's look on the another strategy like turtle. Okay, for example, it's look great when we see some price and we have some resistance line or support line, some channel, and we could check it how it's working. Okay, it's fine. Let's check another one, and this is very popular an idea when we have some stable market. This dependency is working, but if the market is change some reason, for example, you have some different turbulence on the market, we have some negative news, and this stage of the market could change. But this some stage of the market could save, for example, several days. About if you talk about intraday trading, and let's see, for example, statistical about 1 hour. Let's check from sequences momentum. Let's see from 1 hour sequences, and let's check. Okay, we have some total positive return. Okay, we have some positive balance, but in this moment it looks not working. Let's check another. Okay, it's look not working. Maybe for this one. Okay, it's not good ideas. Maybe let's check mean reversing, for example. Okay, mean reversing looks great for the last several days, and we could use this dependency, and we could check average return, average loss, for example, and we could some tuning parameters, and let's check turtle, for example. Maybe turtle. Okay, we have some safe dependency, but maybe it's not good. For this strategy, maybe let's check again momentum for long period. For example, let's look at, okay, we have the same probability, but we have different average return more than average loss, and in general it's working, but it's not good ideas. Yes, it's not a good ideas. Let's look in for another dependency. Let's check what is it. Okay, we have more positive return trades. It looks very good. Average return for positive trade, average loss. Okay, it's look good. Maybe we could use it. And also implement some ideas about cross line, but it's very, very simple. Okay, and let's look on the another strategy, and you could use it. I'm trying to add some back testing in real time. So in general, I use momentum. This is my favorite strategy, and also I would like to use mean reversing strategy, and sometimes I use turbulence strategy, because if we're working with only statistics, it's a simple some ideas about it working, and we could use it to improve trading. For example, I very like to use intraday trading and to find some relationship. For example, I trade several days the statisticals, and it looks fine for me when I'm looking some dependency and I'm trying to improve my main ideas. So guys, you could use it, and it's very simply, and you could check it. The main rule is if this statistical working now, this dependency could save several days. If we have some new news or some high turbulence on the market, we could review our approach and maybe change some parameters for the strategy, because we could the most important ideas on the quantitative strategy is find dependency on the market, and we need trade strong dependency on the market. If dependency on the market is working, and we could use it to improve our trading. So thank you for watching, and let's see on the next video.